This podcast episode is for investor education purposes only and is not intended to provide and should not be relied on for investment advice. Consult your personal investment advisor before engaging in any securities transaction.
The market staged a major rally on the strength of a ceasefire, with oil prices and bond yields dropping this week. Is it sustainable? That may be beyond our abilities to predict on the podcast, but this week we'll look at the elements that may make it work or fail, and what else may have driven the rally in the markets on this week's Wise Investor Show. Welcome to the Wise Investor Show podcast. I'm Chase Hinderstein. Simon asked me to take his spot this week at the last minute because he had to travel, and he didn't want to record the show on Tuesday because, quote, if we nuke Iran tomorrow, tonight's recording will be no good, end quote. But as you surely know by now, and I don't know, maybe this has changed again by the time you hear this podcast, we didn't nuke Iran. I'm coming off of vacation last week, so I didn't have a lot of material gathered for today, but there were definitely some notable events to talk about here. As I was enjoying Taco Tuesday with my wife Tuesday night for her birthday, we got news on the wire that a ceasefire agreement was in place for 2 weeks and that there's a framework for negotiations to work on through the mediation of the Pakistanis to see if the war with Iran can actually be brought to a close and if the Strait of Hormuz can be reopened here. And this led to a major snapback rally in the markets on Wednesday, which actually maintained its strength through the afternoon, even after some initial signs of the ceasefire's details, as they seemed to fracture a bit. And according to Goldman Sachs, it led to the fastest short coverings in the market since 2020, as they said that the total short positions were at that point higher than they've been since those early days of the pandemic. And this wasn't necessarily the markets assuming that it's all over, but it's a reversal that reflects more the lack of conviction that this would keep going than a major rush and a surge in conviction that now all is suddenly well. The first day was actually more of a reorientation of those trades, while the work remains to see if this actually can stick and we can move our focus along. According to Trump, quote, we received a 10-point proposal from Iran and believe it's a workable basis on which to negotiate. Almost all of the various points of past contention have been agreed to between the United States and Iran, but a 2-week period will allow the agreement to be finalized and consummated, end quote. And there's been debate on what that 10-point plan means, because the actual 10 points are a list of what appears to be, I think, non-starters. So it's going to be a bit of a wait and see here with the actual negotiations ramping up this coming weekend. And there's a chance we have a lot more clarity by Monday, which could then bring a major pivot towards either an actual conviction rally or possibly a complete collapse and the resumption of hostilities, which could lead to a full reversal of that big rally we saw on Wednesday. Now, according to the Quincy Institute, which I wasn't previously familiar with, but they are an international relations think tank that are primarily funded by Charles Koch and the Soros Foundation. So I think a pretty big notable juxtaposition on the political spectrum there between their funders. Maybe that gives them credibility. And they say that using these points as the anchor for the negotiations is a big diplomatic victory for Iran, and that Washington appears to have conceded that reopening the Strait of Hormuz comes with a tacit recognition of Iran's authority over it. While the initial statements this week do appear to indicate that, it's hard to believe that we've gone this far only to conclude with this as the final outcome. And, for example, the points on that list include, but not limited to, I'm not going to read all 10 of them, but some of the points on Iran's list were the continuation of Iran's control over the strait, acceptance that Iran can enrich uranium, the removal of all primary sanctions on Iran, compensation payments to Iran for the damages during the war, and the withdrawal of U.S. combat forces in the region. So while the announcement initially indicated that this list would be the basis of the ceasefire and a lasting permanent solution, and also statements that most points have already been agreed to, I think it's hard to believe that these points here are what we'll see agreed upon for this to actually come to an end or anything remotely resembling it. So I'm guessing that next week may be remarkable in its return to volatility in the markets. Iran doesn't seem poised to make major concessions themselves, and ultimately the ceasefire may be short-lived. However, signs contrary to what I just said are reports also that Iran was kind of forced to the table, somewhat against their will, by very strong pressure from their partners in all of this, the Chinese. And the Chinese are economically feeling some of the worst pain from all of this disruptions that are coming from it. So whether the Chinese have the power to then push Iran further remains to be seen. But if they're sticking to points that look like this on the list, I think we're probably not done yet. On Thursday, there was early on a little bit of a give back in the markets to the big gains on Wednesday. Not a ton, but the markets started lower, only to see this big rally start in the afternoon on the news that Israel was going to begin direct negotiations with Lebanon. Early on, that had been a sticking point. Israel was saying Lebanon was separate from this, and the Iranians were saying, no, it's not. I'm not sure who it is in Lebanon that they'll be negotiating with, since they have many different factions there, not really a concise, strong central government. But it did, in the markets at least, alleviate some early concerns that the ceasefire and the opening of the Strait of Hormuz was already being threatened by Israel's continued attacks in Lebanon and Iran's statements that they're going to stand by their allies in Lebanon. And that takes us into the weekend and a guess at what Monday may bring after the actual negotiations begin over these next couple of days. Now, while there's the chance that they quickly go off the rails, the negotiations go off the rails, and the markets start really tough on Monday, the odds, I guess, are more likely that we'll see at least some initial positive spins to what goes on, if not perhaps at least lasting results. But while I remain optimistic, I'd, as an investor, take a cautious approach to believing that this is a deal that's almost done here. We did have some important economic news along with this all this week, with the minutes from the Fed showing that the expectations by them are that unemployment's going to be higher next year, meaning that they're much more likely to want to cut rates. And then we got the final fourth quarter GDP data, along with continued claims for unemployment and the PCE inflation indicators, which were basically all unremarkable. All those data points were largely in line with expectations. And upon their release, none of them actually moved the markets at all. So for now, it's a wait-and-see approach, and I am going to take a quick break right now. But when I return, I'll try to give an important update from the portfolio on some key players in this AI revolution that is still going, albeit below the fold in the newspapers this week. For the Wise Investor Show, I'm Chase Hinderstein, and I'll be back with that in a moment.
Midterm election years are almost always the most volatile, and so far 2026 is proving no exception. Will you let the inevitable churn in your political leanings disrupt your plan and portfolio? Tune in every week as we discuss the latest financial trends and what investors need to know. To avoid the endless barrage of distractions and become a better informed, wise investor, listen to us at The Wise Investor Show at RaymondJames.com/The Wise Investor Group, or just find us on your favorite podcast app. Raymond James & Associates Incorporated, member New York Stock Exchange, SIPC.
The information contained in this podcast represents the opinions of the hosts and guests and does not necessarily represent the views of Raymond James & Associates, Inc., the Wise Investor Group, or their respective affiliates and employees. This podcast is for investor educational purposes only and is not intended to provide and should not be relied on for investment advice. The contents of this podcast do not purport to constitute a comprehensive summary of all information necessary to base an investment decision. Past performance is not a guarantee of future results. Securities mentioned in this podcast may not be suitable for all investors. Seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your individual situation. Discuss any tax or legal matters with the appropriate professional advisors. Raymond James & Associates, Inc., member New York Stock Exchange, SIPC.
Welcome back to the show. An update on a couple of companies or a few companies in the center of the AI arms race as it applies to the build-out of the application of all these models and the hardware and the chips required to make it all work. These are companies that I own personally and we own for our clients. We've talked about them many times on this podcast, and this is really just an update of what's happened in the last week, as it's been, I think, partially overshadowed by all this geopolitical focus. But they're companies that I have a conflict of interest in because of that ownership. So keep in mind that I have this positive bias to them. Do your own homework before you go out and take any investment action on them. For one thing, very briefly, Amazon this week was touting their advancements in their own chip designs. Amazon actually has NVIDIA as a key partner for their AI build-outs. So this was kind of received as a bit of a shot over the bow of their own partner, but also a slight pivot in their own capacity to themselves become a provider of an alternative chip solution. But mostly it provides them with more options as they build out their AI platform within Amazon Web Services. But the bigger news was, as it was announced that both are describing here as a multi-year, multi-generational commitment here between Google and Broadcom to use Broadcom's custom chip designs and the gear that goes along with it on Google's next-generation data center infrastructure. And while both stocks traded higher on the news, which was released on Tuesday before the whole market rallied on the news regarding Iran, it really supports Broadcom's place in the AI ecosystem as a major player alongside NVIDIA. We've said it many times on the show that the long-term winners from AI development, it's going to take years to be known who the winners are. But Google is another of the major hyperscalers who have the cash and the intent to spend it on these efforts. And this places Broadcom as a major beneficiary of all that spending. JP Morgan, in their report on the deal, emphasized the importance to Broadcom that this places them not just as a chip supplier, but also squarely in Google's tech stacks, as they're also, along with the chips, supplying switching components, network interface cards, and all this other gear that goes into the data centers that Broadcom will be providing. Within this was also an alignment for Broadcom with Anthropic, who also a major partner with Google with their AI model development, and joins them to the enthusiasm around that pre-IPO AI player. It more wholly aligns Broadcom alongside Anthropic now, and people are pretty excited about Anthropic in general, it seems. From Broadcom's perspective, Deutsche Bank characterizes this deal as both financially and strategically significant. The firm estimates that the Google TPU long-term agreement alone could generate well over $50 billion in revenue over the next 5 years, with the Anthropic expansion potentially adding tens of billions of dollars more over time on top of that, based on disclosed capacity commitments and industry benchmarks. Now, while Broadcom has not provided granular revenue breakdowns on the deal tied specifically to each customer here, management has positioned these agreements as foundational to its longer-term AI revenue outlook. And JP Morgan made a point of drawing a comparison for Broadcom with kind of their origin story, their previous agreements with Apple. They were saying that this type of deal mirrors those previous long-term relationships that bring scale and transparency to the future revenue sources for Broadcom. Now, once upon a time, Broadcom basically traded it, and this is 10 plus years ago, traded as an Apple stock proxy. And it tracked Apple, for better or for worse, many of the days. But while that relationship with Apple still exists, Broadcom is now diversified into many, many other different outlets. And this agreement here mirrors instead that alignment proportionately, but it doesn't leave them wholly dependent on its success alone. Per Deutsche Bank's report on the deal, the expanded Google-Broadcom partnership marks a clear step towards hardwiring custom silicon into Google's long-term AI roadmap, they say. while further entrenching Broadcom as a central enabler of hyperscale AI infrastructure. The agreement reinforces the idea that as AI workloads grow more specialized, which is where Broadcom's strength is, and more power intensive, these large cloud platforms are increasingly opting for deeply integrated, long duration partnerships rather than shorter cycle merchant supplier relationships. And while NVIDIA, who basically supplies the latter in that comment, is currently the clear leader at supplying the most sophisticated chip solutions, Broadcom here is becoming a nice complement to it as they're becoming the go-to name for custom chip solutions, which are demonstrating their importance in these AI systems. Okay, that's it for me this week. For the Wise Investor Show, I'm Chase Hinderstein. Thanks for tuning in.
The information contained in this podcast represents the opinions of the hosts and guests and does not necessarily represent the views of Raymond James and Associates, Inc., the Wise Investor Group, or their respective affiliates and employees. This podcast is for investor educational purposes only and is not intended to provide and should not be relied on for investment advice. The contents of this podcast do not purport to constitute a comprehensive summary of all information necessary to base an investment decision. Past performance is not a guarantee of future results. Securities mentioned in this podcast may not be suitable for all investors. Seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your individual situation. Discuss any tax or legal matters with the appropriate professional advisors. Raymond James and Associates, Inc., member New York Stock Exchange, SIPC.